Joining us this morning is Jefferies analyst Brent Thill, a 550 target and a buy on the stock. Brent, always good to see you. The title of your note is "Tripped on the Hurdle, Still Leading the Race." Is the hurdle about Azure?
It was. Good morning, Carl. They effectively had such a high bar to hit. They missed their own high end of their own expectation, and the street was higher. So we think this is effectively a short-term stubble. As we've said, they're so far ahead of others in the AI race. We don't have an NVIDIA of software. Microsoft's the closest to it, given their positioning in AI. So today, we effectively think that there will be a reacceleration in the back half. They've guided to this. This is effectively a reset on expectations. This is not competitive. It wasn't anything with execution, just a little weakness in Europe and a little transactional weakness in the quarter. This was their lowest beat in 6 quarters. So if you want to be completely honest about the situation, they've been putting up way better quarters. This was their seasonally strong Q4. Everyone was searching for a little more answers about what happened. But I think we're talking, again, as we've said, they missed by inches, but the company's still ahead by miles, as we call it.
What number are you using for full year CapEx? And were you convinced about their argument about the durability of their investments?
CapEx goes to $83 billion, which is effectively the GDP of Luxembourg. For my perplexity search this morning, you think about that number, it's insane. And it's higher than most of the other cloud providers. And as they said on the call, they can't keep up with demand. AI demand is higher than what they can actually provide. And so everyone is saying, well, how do you know this is going to work? And we've said, look at what they did with Windows. Look at what they did in gaming. Look at what they did with Azure. Nadella and Amy Hood have been so far ahead of this, and everything they've invested in has paid off. And the fact that they actually improved margins in the year of AI tells you they're going to make money. It's incredible what they're able to do on the bottom line in the face of all the spend. And so everyone asks, well, what gives you conviction? The conviction is 25 years of covering Microsoft. Every dollar they put in, they've gotten a lot more out. So I think this will be the same. Again, it's really early. We're like mile 1 of the marathon, and it's hard to see. But based on their track record, all roads lead back to this is going to pay off.
Well, yeah, NVIDIA shares are showing at least the results of that CapEx number as well, up over 10.5% right now. Brent, what does it mean for the rest of your coverage universe when you see Microsoft spending this kind of money, and you're a believer, obviously, that they will see a significant return and generate great margins on it as well?
As a software analyst, I've said this, I want to be a semi and internet analyst right now. Software is not the place to be, because when you have CapEx numbers going up another $10 billion plus on top of our forecast, it's going into AMD, it's going into NVIDIA, it's going into ANET and Arista for networking. It's still going into AI infrastructure. As we've said, the foundation of this house has to be built. The plumbing, all the concrete, the wood, that is not our vendors. All the software vendors are like the artwork. They get hung at the end of this. So we're admitting that software is the tail end of this. It is not going to be the first place that monetizes. So it's not great for software short term. I think over time it will be good. And it's more of a 25-26 event. So as I've said, software and the rest of tech are going to lead the way. Software is going to lag. But it should be good as we go into 25-26. And valuations aren't crazy. Multiples have been reset. And so we don't think, again, the backdrop of demand is coming, but investors have to be patient in the software industry.